This was one of the most interesting days I've ever seen in the stock market in my 23 years that I've been doing this. First of all, NVIDIA lit a fire underneath of the AI theme with their amazing earnings report that resulted in the stock being up basically 24-25% today. Remember, this is a massive company. It's now the 5th largest company in the United States, knocking on the door of $1 trillion valuation. Just today alone, they tacked on $180 billion, which is the second biggest addition to a single company's market cap that we've ever seen in stock market history. That lit a fire under that entire technology theme, where technology from a sector perspective was up 3.84% today, and hardly any other sectors were even up, yet that was enough to push the S&P 500 up 0.87% today. We also found that there were way more stocks hitting new multi-month lows than highs today. We saw more companies closing lower today than up. All of this is very odd when you consider the S&P 500 had a strong day today. It was almost entirely due to one company, NVIDIA, and kind of its tertiary plays that are right around it. So amazing day there. Lots of interesting data that we discover through our macro analysis in our 12 grid charts here in tonight's video. So I want to take you through all that. Also show you which postures are changing since we just reviewed them on Tuesday. And then I'm going to show you some of the tools that we use here at Market Scholars, including the stock selector tool. And then in our trade application example at the end of tonight's video, I wanted to focus on a company that's setting up bearishly with a bearish near-term divergence signal, and that comes from a payment space within kind of that fintech world. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's May 25th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also find at the bottom of those emails which stocks are giving you overbought and oversold cluster signals within the S&P 500. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as usual, let's get started here with the heat map of the S&P 500. And today was one of the more interesting and / exciting days that we've seen in quite some time. Now, in case you've been living under a rock, I'm just joking about that, of course, but some of you are not on social media and Twitter nearly as much as I am, so some of you may truly not be aware, but NVIDIA lit the world on fire here today. It was just truly astonishing. You can see the NVIDIA rectangle off on the left-hand side here, and when I hover over it, you can kind of see in that blue area, it moves when I try to hover my mouse over it, but you can kind of see it. It's in the Apple square right now. It says NVIDIA was up 24%. That is not a mistake. That is literally what happened today. And look at the market cap on there. Probably harder for some of you on your cell phones to see this right now, so I'll read it. $939 billion. We are knocking on the door of $1 trillion company now with NVIDIA. Remember last week, or it might have even been Tuesday, I can't remember what day I said it, but I remember the comment. I was telling you guys how NVIDIA had surpassed Berkshire Hathaway in market cap. That was before it added 24% to its worth here today. Truly extraordinary. Remember, that's effectively what the stock market thinks the company is worth. Shares outstanding times the share price, and that amounts to nearly $1 trillion company. Remember, we've got Apple, that's the biggest company out there, $2.7 trillion. We've got Microsoft, that's $2.4 trillion. We've got Alphabet, that's $1.5 trillion. And if Amazon were on here, I would show you that it is also $1 trillion company. But apparently the the ears over of the people over at Thinkorswim are not ringing yet as I continually bring this up, that they have not fixed their sector and industry allocations yet since the update that was done 2 months ago at this point. So still waiting, Thinkorswim, any day now. But just joking there. I wish I could show you Amazon. It's just not on here at the moment because it was one of the companies that got changed with its industry group. But just take my word for it. If Amazon were on here, it would be the fourth trillion-dollar company. So depending upon how things shake out here, either tomorrow or perhaps next week, we might be literally talking about our fifth trillion-dollar company in history. Remember, up until about a decade ago, we never even had a single trillion-dollar company. So this is all recency as a result of inflation. And of course, many of these tech companies have been tremendously successful businesses. They have become more and more powerful, more and more profitable, and therefore worth more in the stock market's eyes as well. So I think I heard them say on CNBC today that NVIDIA's move today in terms of the market cap that it added was $184 billion was tacked on to their market cap today. And that was the second biggest market cap addition on a one-day basis in history. The only other time was Amazon back in, I think it was February of 2022, after they reported earnings. Back then, they added on, I think, $191 billion. So NVIDIA had a shot to take that out here today if they would have closed at the high of the session, but they finished a bit off. They did trade up there towards 400 at its heights. It did close at $379.80, but still truly a remarkable day. Now, they weren't alone. Keep in mind that we actually own NVIDIA in my top-down trend trading class here at Market Scholars. So this was a day where the trend traders were elated, especially if you had your portfolio positioned in a certain way. So for instance, if we come over here to that account, you will see that we have NVIDIA down here. We have just 56 shares, and that doesn't sound like a lot, but what's interesting about it is as I click on this here, you'll see we just bought it in February 6th to be exact, and we bought it at $213.79, and just those 56 shares have already delivered to us gains of over $9,000. That is a profit and loss of 77% to the upside. Again, we're not talking about a trade we put on years ago here. We're talking about a trade that we put on just over 3 months ago, up nearly 80% here at the moment. And today alone delivered over $4,000 worth of gains to us there. But it wasn't alone. You guys have heard me talk about in this presentation in the past. Of course, many of you are already premium market scholars, so you know how our portfolio is positioned already. But even here in this presentation, we've been talking about AI for quite some time, and I've been mentioning here offhand here and there how our top-down trend trading portfolio is very well positioned if AI really develops into a substantial theme. NVIDIA is not alone there. You'll notice that we also own Microsoft in that particular account. And in that case, we're up about 88%. And that has delivered about $6,500 for us. It was up 4% here today, approximately. The other thing I should note about Microsoft is this is actually one of our coffee can positions. So this really undersells what we truly have benefited by, because this is the final half of our shares that we originally owned. We sold half of our shares when it doubled. That way we could take our cost basis out of it. We do that with other positions as well. The ones that go up, you wish you would have had the shares back, but the ones that went down, like the Zoom videos and the DocuSigns, you're thankful that you took out the risk when you did. But the point is, Microsoft is one where we actually used to have double the position. We're planning on keeping the remaining shares, and on those we're up 88%, and nice $6,500 worth of gains on that half a position there. Another one that's similar to that is Google, which is also a coffee can stock of ours. So this is our remaining half. We used to have double the position, but on this remaining half, we're up about 74%, and we've made about $5,200 in profits. And then, not to be outdone, the stock that I just mentioned to you guys last week, in this presentation that kind of came out of nowhere with a crazy 8% up day. This is Synopsys. This one obviously is not nearly as well known as NVIDIA, Microsoft, or Alphabet. Nonetheless, it has been a home run for us in that top-down trend trading class as well. This is another one that's a coffee can stock. So this is the remaining half of our shares, and on those we're now up 190%, making about $11,000 on those final half of the shares, which again is underselling what we actually made on the full trade in terms of the profits initially. And we were up about $1,500 today alone on that trade. So we've been very fortunate with how this AI theme has developed, and those 4 companies have made up for a lot of difficult trading in other stocks that we own in that account. Remember, last year was not a very good year for trend trading, and so we're thankful that it's kind of swinging back into favor for that particular portfolio. Another thing I was going to mention to you is that we use this stock selector tool here at Market Scholars to help us make those decisions. Some of you might be wondering, well, how did you know to buy NVIDIA or Microsoft or Alphabet or SNPS? Well, this is the tool that brought us those very securities. And this is something that we make available to our premium members of Market Scholars. So of course, if you're interested in that, make sure you come over here to our pricing table. But if you're looking for this tool specifically, it's under our Tools tab and then clicking on Stock Selector right there. And I wanted to point out to you that not only on this default tab will you see the rankings that we use for our top-down trend trading class, where we're ranking 1,000 stocks from 1 to 1,000, with the ones that are ranked the best up here at the top. This is based upon a proprietary scoring system that we use where we're blending multiple time periods to spit out a ranking system. And as top-down trend traders, we're looking not just for stocks that are strong, but we want them to also be in strong sectors and strong industries. So we look for the top thirds in those 3 different areas there. And I wanted to point out that you can see here that NVIDIA is kind of highlighted in green all the way across there. It's ranked number 3 out of 1,000 stocks, and this was before today, right? This was last updated on Friday. I do this update on this tool every Friday night, and so it's not like NVIDIA is now ranked number 3 because of what happened today with it up 24%. That was before the 20% push. It was already the 3rd best stock out there. Now, you'll notice over here we've got our active trade tab, our tag on it as well. But if you wanted to see what our holdings were, if you're a premium member of Market Scholars, you would click this top-down trend trading holdings tab here. That's, of course, where you're going to find not only NVIDIA, but Microsoft and Alphabet and SNPS and others. But I wanted to point out as well while we're here that Super Micro Computer is ranked number 1. Again, this was based upon Friday's information. This is not after what has happened today. This is what we already knew on Friday when this tool was released. Again, every Friday night is when it is released. And some people may be surprised to learn that NVIDIA was not alone in its standout performance today. Of course, I already mentioned those other kind of tertiary AI plays here a moment ago, but this Super Micro is not part of the S&P 500, and it had an absolutely marvelous day today as well. If I come over here to the charts here for a second, you can see that Super Micro Computer, SMCI is the ticker symbol, was up 23% today. Remember, it was NVIDIA's earnings report that allowed NVIDIA to go up 24% today. Super Micro Computer did not report their earnings today. They were just simply up because they were up. They were up in response to what happened to NVIDIA. And so they basically matched the performance of NVIDIA, the very torchbearer of this entire market here today in terms of ranking. And again, just to highlight the benefit that our premium members receive here at Market Scholars, they would have already known that was the number 1 stock in our universe on Friday night before today. So had someone taken action based upon that, they might have paid for their entire subscription with one single trade here. Again, with NVIDIA, we're up like $9,000, right? But there we've been in it for 3 months. But somebody might have made a whole pile of money in just one single day with one single stock here, whether you chose the number 1 1 company as of Friday night or the number 3 company as of Friday night, you hit a home run in one single day today. Both of them up nearly 25%. Remember, there's also this tab down below here called Stock Rank History. And what the nice thing is about that tab is it's not just going to show us what is this current week's rankings, but it's going to show us what the rankings were on prior Fridays leading up to today. So that way we can pick up on interesting cues as the market is transitioning along the way. And with NVIDIA, you'll notice if we go back to where we purchased it for that account, it would have been somewhere between here and here. So in other words, February 3rd and February 10th. And you can see at that time, it would have been ranked either 21st or 7th best out of 1,000 stocks. So sometimes people think, well, in order for me to make really big gains, I've got to find some sort of uncovered gem and get lucky to discover that when nobody else is discovering it. What this is telling us is it was already discovered in February, and we were willing to jump into it anyway. And as things developed from February, you can see it eventually worked its way up to number 1 a couple of times out of 1,000, and again is ranked number 3. Now next week it's probably going to be ranked either number 1 or number 2. Normally after a day like today, I would say it's almost a shoo-in that it would be number 1 after this week, but considering how great SMCI did today, it's entirely possible SMCI retains the number 1 position this upcoming weekend, and maybe NVIDIA goes to number 2. But same thing there, right? Notice that SMCI was already telling us it was the number 1 stock in our universe 3 weeks ago on May 5th. And had you bought it back then, you're looking at some substantial gains here along the way. So just wanted to highlight that. Usually we don't kind of go into the in-depth detail of these tools, but considering the uniqueness of today's rally, I like to kind of highlight those tools when they benefit our members. And again, I would encourage those of you who are not members of Market Scholars to investigate our services and see if our program would be right for you. But we've certainly been cooking on the side of AI with that top-down trend trading class, and today was one of the more epic days that you'll ever experience in a portfolio as a result of those 4 names that I had mentioned before. Anyway, let's get back over here to the heat map. And after all the enthusiasm about AI and everything in response to NVIDIA, we have to kind of calm ourselves down and now remind ourselves that we actually had more red squares and rectangles here today than we had green ones. So that was a little bizarre as well, right? The S&P 500 was up 0.87% today. That's actually a pretty good day for the market, yet you had more stocks down than up. So this is another one of those days that we've discovered quite often this year where we were pulled up almost entirely by the mega cap stocks, the ones that have a heavier weighting within the S&P 500 itself. Notice that Microsoft, Apple, Alphabet, Meta, NVIDIA, they were all up today. Not only that, but you see that Broadcom has been exploding higher here lately as well. It was up 7% today. While we haven't really traded that one that I recall in our top-down trend trading class, we have owned that one in our dividend growth investing classes. So for those of you that have taken that swing at Broadcom, especially a few years ago when it had a 3 and 4% dividend yield, you're loving life today as well, as that stock was up 7% to a new all-time high. And they themselves have a pretty substantial market cap of $300 billion these days. They, of course, announced some news earlier this week with a tie-up with Apple as well. So that's been another one that's been cooking. AMD has done very well. It was up 11% today. Adobe had a great day. It was up 7%. Oracle was up 6%. ServiceNow was up about 6%. Cadence was up 10%. Already mentioned Synopsys. It was up 9, nearly 10% there. Arista Networks was up 10%, and Monolithic Power Systems was up 17%. Right? Some of these are not quite as well-known names. Nonetheless, they absolutely exploded higher on the charts today. Outside of tech and communications, we didn't have nearly as much enthusiasm. You did see a snapback out of Schwab, so Schwab was up about 4% today. MetLife was up about 5%. Eaton, I heard being discussed, I think in a podcast, that it does have an association with data farms, and they had kind of a somewhat of a looser affiliation with artificial intelligence. As a result of some of the automation things that they do for data centers. So that was part of the enthusiasm behind the NVIDIA number today. So kind of a rare industrial that benefited from the NVIDIA report today. Kind of in those similar vein, notice that Equinix, which is actually a REIT, technically real estate is not listed on here because, again, this is kind of a screw up from Thinkorswim right now. They're just kind of cobbling them together in the energy sector. But be aware that Equinix is definitely not an energy stock, but it is a data center REIT, and it was up about 5% today. So that was also in a direct response to what happened with NVIDIA today. So you wouldn't think that real estate or industrials would have any sort of connection to NVIDIA, but in the case of Equinix and their competitor Digital Realty, along with Eaton and perhaps a handful of other industrials, this did have kind of wide-ranging effects beyond what you would just assume at first blush. You can see that most of the other markets were down today. All of those oil companies struggled here today. It looks like pretty much all the oil companies were lower. You had most of the healthcare companies lower. In fact, some of you just saw me tweeting about Johnson & Johnson here a moment ago. It's noteworthy enough that I might as well show you what I was referencing in that regard. Here's the tweet itself. And what I was mentioning is that Dividend King Johnson & Johnson is back in the blue undervalued based upon dividend yield theory zone of the Market Scholars dividend stair-step chart. As seen on the attached chart, it's been pretty rare to see it there over the years. Last time was during the March 2020 COVID sell-off. And this blue arrow right here will point at that March 2020 sell-off, where for only 2 weeks you had the opportunity to buy Johnson & Johnson in that blue zone. Now, prior to that, you also had this moment in time back here in 2016, 2015, and then 2013. So it's not like it's unheard of to be in that zone, but as you can see, it is very rare. It's not like one of those stocks that is living in the blue zone. It's been one that has been closer to the orange overvalued zone for quite a few years. This stock has finally dropped down enough here today to actually be touching this blue dividend stair-step line. You can see that line represents where the stock would need to trade to have a 3.07% dividend yield, and as of today, Johnson & Johnson now has a 3.08% dividend yield. So there's of course controversy there in regards to some of the litigation that they've been going through. They also have been going through this spin-off of their Kenvue consumer health division, so it's not maybe as clean of a story as you might want, but considering its illustrious history of raising its dividends for the last 6 decades on a yearly basis, it's one of those that is more highly regarded. Remember, it's one of just a few companies that has a AAA balance sheet according to the credit rating agencies here in the United States as well. So figured I would let my Twitter audience know as soon as I saw it that we did have that situation emerge once again for the very first time in basically 3 years. So for those of you that have been waiting patiently for Johnson & Johnson to look a little bit more attractive, maybe you're finally getting to that area here all of a sudden. So J&J was down about 1.44% and now has a pretty attractive yield. Another dividend aristocrat is Medtronic. It struggled here today. They actually raised their dividend today, but even that was a disappointment. They only raised it like 1 penny. So their earnings announcement came out and the stock was down about 4.5%. So that was a bit disappointing to me there. And there were others, I don't want to just pick on those, but those were some that caught my eye as a result of some of the news and other things going on out there on Twitter. You can see that all the utilities were down today as well. A clean sweep of bearishness across all utilities. It looks like there was a clean sweep of selling in the consumer staples there as well, which is really rare. But that just goes to show you how bifurcated of a market that we've had here recently, where it seems on the outside like, hey, all is well with the S&P 500. Then you start digging in a little bit more, and it's kind of like, no, it's really not. We're not getting the participation we would want. In fact, another thing that I retweeted here this afternoon that I thought was quite interesting was from Christian here, and he was saying that on the 4-week new highs, there were only 23 of them, and on the new lows, there were 189. And so, it's hard to see here because you'd have to really zoom in, but, this left-hand column is the new highs. This right-hand column is the new lows on the last 4 weeks, so basically over the last month. So his point is that it's awfully strange that we're having, this nice up day for the S&P 500, yet you're seeing way more stocks hitting new lows than new highs. So again, it's still the same problem we've been discussing with this market rally. It's great to see it go up, but how it goes up is important to many people. And right now, how it's going up is it's going up on the backs of basically 7 companies. And everything else is doing, average to poor. There's actually legitimate bearishness out there in some sectors at this moment. And normally that doesn't happen when you have a market that looks like it's in coast mode. So maybe that would be a good segue to pop on over here to the platform now. And wanted to show you real quick here that the advancers decliners, this tracks something slightly different than what I just mentioned a moment ago with new highs, new lows, but it's still kind of part of that same theme where you're trying to develop what's going on with market breadth. And right here you can see that today, despite the S&P 500 being up 0.87% today, there were more decliners than there were advancers today. We're not just talking about a 52-week high thing here now. We're actually talking about today alone, there were more stocks down than up on a fairly big up day for the overall market. So we had about 40% of stocks closing in the green and about 60% of stocks closing in the red here today. But what I was kind of trying to make a point of there a moment ago about the markets being in coast mode, if we come over here now to our 4 grid, notice that the S&P 500 is just coasting along nicely up to the upside. It's actually 0.88% to be precise, but it was a nice up day. Yet more stocks were down within this very index than were up. And more stocks were hitting monthly lows today than monthly highs within this very index that is up and trading above its rising moving average right now. So if you were just simply looking at this chart, you might be thinking to yourself, yeah, the markets are hanging in there pretty good. You start looking at the data underneath the surface, things don't look nearly as positive as what the outside suggests. You will notice that despite the pop higher of the S&P 500 today, we still have that light pink background color. So in other words, this green line has fallen out of the upper reversal zone and it has not yet popped back higher. So we would identify this as weakly bearish here at the moment from a posture perspective. Now, offsetting that to a degree is the fact that we had enough of a jump higher in the S&P 500 that we're now trading back above the rising moving average. So those are two kind of offsetting things. Posture says bearish, but moving average still says somewhat bullish. So, we'll see. Eventually, a trend will emerge. Either this will keep on popping to the upside and it will flip the posture back to bullish, or this thing will fail back to the downside and this moving average color will go back to yellow the way it did yesterday, or perhaps even red. So we'll await further data there, and who knows, maybe we get that information as soon as tomorrow. But it's kind of interesting because we have so many things at odds within this market right now, and it seems like more things than not are leaning bearishly, even though the market itself from the outside looks somewhat bullish. It's peculiar to say the least. The Dow Jones Industrial Average actually closed lower today. So on this big, beautiful day, led higher by the second biggest addition to market cap in the history of the stock market, thanks to NVIDIA, on a one-day basis for one stock at least, you would think this would be a marvelous day for the stock market. Nope. Dow Jones was down today. They weren't alone. You can see down below here, the Russell 2000 was also down today. So is that the sign of a really healthy market? I'll let you be the judge of that. But generally speaking, you can see there are flies in the ointment. Notice that the Dow was down now for its 5th day in a row. The Dow is so out of favor at a time that everybody's so enthusiastic about the AI trend that the Dow literally has an oversold cluster signal right now. Again, not a normal occurrence in the sign of a healthy market where people are so enthusiastic about Nvidia and Microsoft and Alphabet and all those names I rattled off before. The Dow has sold off 5 days in a row to the point where you now have this little green dot showing up when we have all three of those lines in the lower reversal zone. It oftentimes is an opportunity for the market to reverse the opposite direction, and it usually happens when there's pretty heavy selling. You can see the last time we had that on the Dow was back here in early March. We sold off into mid-March on that regional bank crisis. You plotted those oversold cluster signals there 2 days in a row, and that was effectively the end of it. You had lower intraday prices here a few days later, but it didn't really breach it on a closing price basis, and that did lead to a pretty respectable rally that eventually culminated in an overbought cluster signal when all three of those colored lines were in the upper reversal zone at the same time, and we plotted this red dot up here. That then led to 4 days in a row to the downside, which is basically what has led us to where we're at right now. So you had oversold conditions push to overbought conditions, pushing back down to oversold conditions. What does the future hold is anybody's guess, but would it be entirely surprising if the Dow caught some sort of a bid here in the short term? To my eye, no, it would not be particularly surprising. They've really been out of favor compared to the technology-led areas like the S&P 500 and the NASDAQ composite. And don't I know it? My portfolio personally as a dividend growth investor is going to look a little closer to the Dow Jones than it is to the NASDAQ. So even I've been feeling the sting here more recently as kind of your big lumbering giants of industry have really struggled compared to the up-and-coming tech stocks that are out there. So if you're feeling that pain, you're not alone. I'm right there with you. It is what it is. Remember, last year the Dow outperformed, so we have to remember that we need to offset the good with the bad in this business. So it's interesting to say the least. The Russell 2000, as I mentioned there a moment ago, was down worse than the Dow today, down 0.7%. And although it doesn't have an oversold cluster signal like the Dow does, it did have something noteworthy happen today. We're back below the falling moving average, just like that. Remember, 2 days ago I was with you and I was intentionally pointing out this candle to you because it stood out to me as well. We had a breakout attempt to the upside on the small cap Russell 2000 that day, but I told you guys on Tuesday night, that's not really how you want to see the day end. In other words, we tried to break out early in the day. In fact, on an intraday basis, we did. We cleared this prior resistance. But by the end of the day, we closed basically at the low of the session, well below the breakout point. So it was basically a head fake type of a move. Well, here we are 2 days later. Things did not get better after that long upper shadow. We are now back below that falling moving average, and we have a weakly bearish posture here. Dow's is strongly bearish with that darker shade of pink. This lighter shade of pink is weakly bearish. So there's still time to turn it around, and maybe we get that opportunity. Notice today's candle almost looks like the opposite of 2 days ago. In other words, we've now got that long lower shadow here today, and that is somewhat at a support area. So you could almost envision the Russell 2000 kind of trading between that range for a while until it sorts out what direction does it actually want to break towards. But there is a tug of war going on under the surface between the Russell 2000 participants. The bears had their day a couple of days ago. Today the index was still down, but the bulls were actually able to get off the mat on an intraday basis and close well off of the lows. So at least there's some life there out of the bulls. But I would say all else being equal, it still leans more bearishly because you're back below that moving average, and that's where you've spent most of the time in the last 3 months of that chart, mostly affected by the regional bank crisis. But still, it's not a chart that looks like it's breaking out to the upside like a lot of people are hoping for at this moment. And then let's talk about the star of the show, which is the NASDAQ composite, which is our chart in our lower left there. What a remarkable day it had. It was up 1.71% today, easily outpacing the other three indices, because this is where you're going to find that tech-heavy index. And all those names I rattled off previously, some of them unknown names like monolithic power systems, that's going to play a role in the NASDAQ composite, as is a stock like Super Microcomputer that's not even in the S&P 500, which was that stock I mentioned that was number one on the stock selector tool over at Market Scholars. So anyway, those types of smaller companies that participated alongside NVIDIA have a bigger ability to impact the NASDAQ composite. Remember, this is not the NASDAQ 100. It's a different index. This one is the full composite of the NASDAQ traded securities, but it does lean very heavily to the technology side of the ledger. And you can see that we nearly broke out here today. That's how good of a day it was. We had 2 days in a row to the downside, followed up by this really nice upward move. And remember, when I was with you a couple of days ago, I was pointing out this bullish intermediate confirmation signal here. We were talking about how it wasn't quite ideal because the red line was below 5. Nonetheless, it existed, and the blue line was where we wanted it to be. And so it's nice to see that snapback for people who would have bought the dip on that day. Even if they had to suffer somewhat of a down day the very next day, you're back in the profit zone here just 1 day later. And if I'm not mistaken, oh, it was so close. I was checking to see if yesterday would have also been a second day in a row of a bullish intermediate confirmation signal, but it just barely missed it. There's this little red number right here that I'm circling, and if you point at the candle on that day, so I'm going to point at yesterday, that little red number says 20.06. So in other words, it was just barely above the lower reversal zone, so it wouldn't have quite qualified there, but it was awfully close, and some of you might have taken action based upon that as well. And if so, you're really happy. 1.7% to the upside just 1 day later there. But, another way to look at this would also be, hey, we're back to that candle where we hit that high about 4 sessions ago. And some of you might say, well, is that bearish? I mean, after all, that's going to be, a little bit of a resistance area. Are we able to get through that? Well, time will tell. We'll find out as soon as tomorrow. But right now, you wouldn't want to count them out based upon what we've seen out of the tech stocks here today. I mean, they absolutely erupted higher. It was marvelous. I'm sure the short sellers in NVIDIA were carried off in body bags here today. That's how aggressive of a day it was to the upside. We did have some action after hours, by the way, as well. I didn't touch upon that, but we're still in earnings season today. And one stock in particular that kind of adds to this theme of AI and technology is Marvell Technology. This is ticker symbol MRVL. And you can see that this stock is just erupting after hours here tonight as well. They had their own earnings report. Now, they were already up 7% today just because, it was a good day for tech. And they were just participating alongside NVIDIA and all the others. Just a normal day for them, up 7.5%. Well, if you thought that was impressive, hold my beer, because you can see after hours here, this thing is up another $8 to $9 per share. Remember, the normal session today was only up $3 per share. That equated to a 7% move. So if you're up another $9 after hours, we're talking about double-digit percentage move to expect out of Marvell Technology as soon as tomorrow morning, assuming these gains hold. So, that looks pretty promising there, once again, on the tech side of the equation. Another one that reported after hours tonight was Workday, and it's also up tremendously. It closed the normal session at 196. It's currently trading above 211 in the after-hour session on their earnings announcement. And another technology-oriented company, Autodesk, is holding up okay. It's not up nearly as spectacularly as those other two, but is trading up a little bit, a couple of bucks per share in the after hours after they reported their earnings. So things are looking pretty strong tech-wise after the bell, and that could help support a further move into the NASDAQ composite as soon as tomorrow. On the negative side of the ledger here tonight in the after-hours session, retail is not doing particularly well. And remember, we've seen a lot of retailers struggling here lately. We've seen, Home Depot, especially prior to their earnings announcement, struggling. We've seen Target start to slip here more recently. Costco reported their earnings after the bell here tonight, and they've slipped a little bit, although they've kind of worked their way back up to break even. But at one point in the after-hours session, Costco was trading as low as $4.71, but they've kind of gained all that back. So it looks like we're set for perhaps a flat open tomorrow in Costco. But another one that won't be flat in all likelihood is Ulta Beauty. This has been a pretty remarkable stock over the last decade or so. We actually were doing a swing trade on it. We've already shut it down successfully, so let me get those lines off there so it doesn't distract you. But Alta is a company that we no longer have a position on right now, and we're thankful for that because that stock is down tremendously in the after hours session. You can see it closed today's session at 485, and after hours it's trading now below $449 per share. So it's going to have a pretty awful day tomorrow, probably down about 6% or whatever that is. So a little bit of a mixed result there in retail land. Restoration Hardware also reported after hours tonight, and it looks like it's down just a touch. Closed the normal session at 254. It's down here trading below 249 right now. So it seems like we had kind of two themes after hours here tonight. One of them technology related, and that continued with additional strength from what the technology sector already experienced in today's session. And then we had another theme of retailers kind of continuing what they experience in the normal session today as well, which is further downside pressure. So let's watch those two themes play out as soon as tomorrow. And remember, each morning I do that 9 at 9, so that way you guys know a half an hour before the market opens which stocks are most likely to be affecting the market that day. So stay tuned to my Twitter feed, or just go over to our website at Market Scholars to check in on the 9 at 9 every trading day as well. Remember, Monday will be a market holiday here in the United States. It's going to be the observance of Memorial Day. Some of you watch these YouTube videos from outside of the U.S., so I always like to point that out just in case you weren't aware of it, as we don't always share the same holidays overseas as we do here in the U.S. So things will be quiet here in the United States on Monday, but we'll be back and at it on Tuesday. So stay tuned to the 9 at 9 on Tuesday morning as a result of that. Let's go ahead and pop on over here to the internet. I always like to say thank you to those of you that help support these presentations, and you guys rarely let me down in that regard. As I always say, as long as we're getting at least 100 people to take the 5 seconds out of their day to click a free button that says like on it, I'm more than happy to give you a big effort and give you several hours of my day in this free video. If less than 100 people are willing to click like, then I'm less inclined to give up my hours of my day as a busy business owner as well. So thank you to the 104 people that said, you know what, Brandon, I like what you have to offer, and I want more of it, and I am willing to give you 5 seconds out of my day. I'm kind of joking there a little bit, but I am trying to send a message that I don't think it's particularly hard to click a button. Some of you may think otherwise, and that's fine. We all have our own opinions on the subject. But for those of you that are willing to support Market Scholars by helping us along, thank you very, very much from the bottom of my heart. Let's do some shout outs here. Thank you to Camilla, thank you to Jeff, thank you to Roger, and to Brandon, Dr. Bob, and Jeanette, and Tom, and Steve, and Eugene, and Floyd, and Karen, and Sarah, and Neil, and Pam, and HR, Prickly Trader, and John, and Carolyn, and Denise, and Evan, and Jim, T-Fib, Adam, Paul, Fathy, Ash, Ayakipa, Vernon, William, Terry, Eddie, H. Patel, Ann, Dave, Carl, Craig, Ken, Dave, Austin. The list goes on and on and on. Too many to get through all of you, but I think it's kind of fun to see your name in lights every so often. And just also, a recognition from me to say it is worth it in my eyes when you do that, because some of you might be wondering, well, do they even care? Do they even know? Yes, we all know. We see the notifications coming through, and it means a lot to those content creators like David and myself out there when you help support our content by simply clicking a button for us. And thank you to all of you who retweeted it as well. That helps even more. But I've learned not to ask for too much out of this. A simple like will do, but for those of you that want to take it a step further, a retweet in addition to a like is also quite helpful to us. So thank you, thank you, thank you. You guys are amazing. I'll do the same deal for you for when I'm scheduled to do the video on Tuesday again. If you want another full-length video of the video, and you're up and over 100 likes, I'll be happy to do it. On the other hand, if you think these are kind of getting long in the tooth, you don't really get as much value out of this content anymore, or perhaps you just want it slimmed down to a smaller 15-minute version, then don't click like. And if we're under 100 likes on Tuesday, I'll just plan on making it short and sweet there for you, and that way I don't have to waste as much of my own time as well if it's not really providing much value for you guys. So I'll let you guys decide collectively on that, but again, thanks to you all for your support. Here we had a busy day at Market Scholars as always. I taught my question and answer session, and David taught his portfolio management with ETFs class. My question and answer session lasted 3.5 hours, as it often does, and we had a nice wide variety of topics here today. We spent some time discussing dividend growth ETFs and kind of breaking one of them down in particular to look at some of the attributes and whether they might be worthwhile investing in here today. We also had a conversation about the cell phone tower REITs, including CCI and American Tower today. By the way, American Tower did raise their dividend. It looked like it was small, but remember that company raises their dividends multiple times per year, so they actually have a 10% year-over-year dividend increase, thanks to Dividend Wave for the information on that one. We also had a chat about Apple and PSA, so public storage REITs. We had a conversation about telecom companies, in particular Verizon. We also had a conversation about healthcare REITs with MPW, and then we had a conversation about some biotech stocks like Amgen. So lots of great stuff there for our premium members of Market Scholars. If you're already one, feel free to check out that content if you're interested in my opinion on any of those topics. Let's also have a chat here about our factor selector tool. As you can see, this was updated 2 days ago, so it does not include today's information. However, I would venture to guess that it will only embolden it further. And what I mean by that is, just like I told you guys last week when I said there's a good chance that quality will overtake low volatility. The reason I had a strong sense that that would occur last week, even before doing the update, was because technology was already doing well late last week, whereas consumer staples and some of those other areas were starting to fall off the map. And so I had a very strong suspicion that we would see a flip-flop of the number 1 and number 2 positions, and lo and behold, that's exactly what happened. Quality went to the number 1, low volatility pulled back to number 2, and based upon what I see right now here on Thursday afternoon, I would say there's a very good chance that those themes will hold true when we look at this information a week from right now. And the reason for that, again, is right now there is a very high correlation of quality right alongside the technology sector. So when technology, the sector, is doing well, quality, the factor, is doing well. And today was the day of all days for tech stocks. So they kind of have they've been padding their lead a little bit there from that regard. So a week from today, I fully expect quality to still be number 1 at the top of the factor selector, unless something very dramatic happens between now and Tuesday, which I don't expect, because Monday we're not even trading. And so there's one less day for a big impact in the opposite direction there as well. And then on the downside, you'll notice that value and dividend yield remain at the bottom of the graphic for the second straight week. Remember, that's kind of your Dow Jones theme there, right? Dow Jones usually has value and dividend stocks in it. With the Dow Jones easily underperforming the NASDAQ, it makes sense in my mind that they're underperforming on a relative basis what's been happening with quality up there at the top. All right, let's pop back on over here to the platform. And let's do some 12 grid analysis now. And let's get started with chart 5A, the asset class 12 grid. And as you can see here, we have a lot more pink charts on the board today all of a sudden than we did just 2 days ago. And that's kind of the benefit of looking at these a couple of times a week. Again, assuming you guys are clicking like. Some of you don't really care about this information, that's fine as well. But assuming you guys are clicking like and we're looking at it a couple of times a week, it allows us to recognize when changes are happening a couple of times a week as well. And it does seem like things are, changing to a degree. One of the things that changed was that the S&P 500 on Tuesday had that green background color. Today it's pink. So that was one thing that certainly caught my attention there. And you'll also notice here that Bitcoin has gone to a bearish posture as well. On Tuesday, it was hanging on to a weekly bullish posture, even though it was already trading below its moving average. But with yesterday's sell-off, despite today's gain, that was enough to kind of tilt the scales back to the bears a bit more. So those are a couple of the changes that we saw just over the last 2 days. But like is often the case, as part of my routine when I give you these hour-long videos, I usually like to start my conversations in the lower corners, both the lower left and the lower right, because those are the themes that have really pushed around the financial markets here for the better part of the last couple of years. And today was another one of those days where I don't really like what I see out of the lower corners. In other words, the dollar was up strongly. We basically closed at the high of the day. Yesterday was an amazing day for the dollar as well. So we are on, just an epic hot streak on the US dollar right now. And it was up about 0.46% today, and we're knocking on the door of breakout territory. The only other candle on the chart, there might have been 2 of them as I look at it a little bit closer, but back here on March 7th and March 8th, were the only 2 candles that were above where we closed here today. So it would not take much. Another day tomorrow could very well do it, where we would be breaking out to 3-month highs on the dollar. And remember, that's really saying something, because we were talking about 3-month lows here on April 13th. Usually there's not this straight down, straight up type of movement in charts, but we're witnessing that right now in the US dollar. Remember, that has a negative impact, all else being equal, on the foreign securities. So it's a similar conversation that I told you guys on Tuesday, which was another day the dollar was up and another day where the foreign stocks were underperforming US stocks. Well, here we go again. US market was up 0.87% today. Today, the foreign developed stocks were down 0.14%, and the foreign emerging stocks were down 0.21%. So they weren't violent days to the downside, but the fact that they were down and the U.S. market was up is another recognition that this U.S. dollar strengthening is hurting certain parts of the market at the moment. You'll also notice that gold tumbled today. Remember, when the dollar goes up, all else being equal, you should assume that the gold market will struggle because gold is priced in US dollars. And here you will see that gold is now sold off so aggressively that we actually have an oversold cluster signal here. Isn't that crazy? I mean, we had one back here that on the 8th of March, and that thing led to an epic rally, but we were, I don't know, it felt like we were at a much more kind of value-oriented territory. We saw a really strong move to the upside in gold. Like, that was an impressive move. So it's a little peculiar for my mind to absorb this notion that after having this epic run, we are now, quote unquote, oversold here at this level, when my mind is still hitched to down here being the oversold level. But, sometimes that happens. Sometimes your mind needs to readjust based upon that. Otherwise, you're just price anchoring. And so who knows? Maybe we get this opportunity. Maybe the US dollar will stall out right here and use this prior high on the 7th of March as kind of a double top situation where it starts to provide resistance. And maybe that gives the opportunity for gold, which is now oversold, to have some sort of a rally back higher. So let's keep our eyes on the lookout for that possibility. Remember, more times than not, I assume that bounces off of oversold conditions will just have a temporary reversion to the mean, and that the prior trend will hold true. But here is case in point why that doesn't always happen, right? This led to an actual trend change on the last one. So could it happen again here? Sure, anything's possible. But that's why, looking at these 12 grids as often as we do in these hour-long featured videos can help us, not miss it by too many days if that is what is to occur. Notice that oil was down today as well. That was one difference compared to Tuesday. Tuesday was another day where the dollar was up strong, gold was down. Actually, I take that back. It was flat that day. But you'll notice that USO was actually up that day. Today, it was also down. So remember, US O is the ticker symbol that we use for it, but you can also pull this up with /CL. That's your futures contracts. So however you want to look at it might give you a slightly different impression, because the futures contract still has the light green background color, but the ETN that tracks it, USO, did it just change? Actually, no, it was still that color as well. I was still thinking about gold, sorry. But the point that I wanted to make is you had a sell-off here today because it's a commodity. And this commodity was negatively impacted by a stronger US dollar. And therefore, it kind of fit the role of the traditional commodities versus currencies relationship. But that has not been the case in recent weeks, right? Gold has performed that role, but oil has actually kind of gone up while the dollar has gone up. Today, it kind of fell back into that normalized role. So it's been interesting to watch those relationships there as well. But that strong US dollar has made it very difficult for foreign stocks to advance. It's made it very difficult for foreign bonds to advance, and it's made it very difficult for commodities to advance. So there is a negative impact when that happens. And generally speaking, I find it personally to be easier to navigate the markets when the dollar is weakening as opposed to when it's strengthening. And so I've found this to be a harder market environment. And I think many of you can probably agree, unless your portfolio is chocked full of almost nothing but tech stocks. That particular corner of the market is doing fantastically well. Most other corners of the market are not. You will notice, by the way, that the 10-year Treasury yield was also up today. A nice push higher there. We're at basically 2.5-month highs now in Treasury yields or interest rates. We closed at 3.81%. Naturally, that has a negative effect on the government bonds themselves, which did close lower by 0.25%, put in yet another oversold cluster signal. We've had a lot more of those here recently, and none of them have really led to much in the way of a substantial bounce. So whether it does or not remains to be seen. I'd like to think that a bounce is due, but had you been taking advantage of that by trying to do something bullish on this very first cluster, you're already in some hot water with that trade. So that's the trick of things. Of course, just one signal doesn't always lead to the bounce that you're looking for. Sometimes you can get multiple signals in a row. But these are going to be dictated by what happens with things outside their control. In other words, if inflation continues to run hot, there's a greater likelihood that TNX is going to rise, which is going to then push TLT lower. And you can also get a little bit of an impact from, Fed statements with Jerome Powell and different things like that as well. But bonds across the board did fall. You had the foreign bonds falling worse than the U.S. government bonds, and you even had your high yield bonds falling today, with all three of those bond categories ending with an oversold cluster signal. Let's take a look here at our sectors now. And of course, we're going to start with technology in this conversation. Take a look at this just magical day out of technology. Remember, this is the most important sector in the entire market. So it's not like they have that advantage of being small and having just some sort of awkward news story, allowing a small group of companies go up. They have a disadvantage because they're already the biggest sector, yet they were up by far and away the most out of any sector today. It wasn't even close. A lot of times on big days for technology, you also find big days out of communications and discretionary. Nope, no help from those two today. Communications was exactly flat, and discretionary was actually down a little bit by 0.45%. But technology was up 3.84%. I did not say it was up 0.38%. I was saying 3.84%. The most important sector across the board was up nearly 4% in a single day, thanks to NVIDIA and Microsoft and a number of those monolithic power systems and Adobe and Oracle and Broadcom. And Apple even pulled their weight a little bit there as well. So a spectacular day for technology. For everything else, it was the best would be a meh day, basically a nothing burger, to everything to a pretty bad day in some cases. If we look at the bottom rung here as an example, utilities were down 1.3% today and healthcare was down just over 1% today. Both of those, in addition to the other two defensive areas, staples and real estate, all four of that bottom rung ended with oversold cluster signals today. Joining them was also the materials. So we actually have five sectors that had oversold cluster signals on a day where the stock market was up because of one single sector pulling the weight for the entire market today. Without technology, the market would have been down tremendously. With technology, the market was up very nicely. Strange, strange, strange. All right, let's get into our trade application example now. And I'm just going to pull up chart 3A for this, the swing trading chart. Now, truth be told, I was somewhat interested in doing a bullish trade on Apple today. In fact, I tried to get a trade filled, but they wouldn't fill me at the price that I wanted. So I opted to go a different direction. But I'll just point that out for honorary mention, so to speak, for those of you that are looking for other trade ideas. This is a pretty decent bounce out of Apple, and unlike Nvidia, it doesn't feel like the train has left the station. It looks like it's just kind of a part of a normal, healthy bounce up and away from that moving average there. So I didn't get filled on that bullish trade that I was thinking about doing on Apple, and so I set my sights on another trade where I was able to get filled, and that company is Shift4 Payments, ticker symbol 4. Some of you might know that the founder of this company is somewhat famous because he started this company, I think, when he was in high school. And he's also been to space. He's one of those ultra-rich billionaire astronauts of our current era. Anyway, his company here is a payments company. I've actually used them occasionally at different retail outlets and things like that. They're one of those companies that will read your credit card and process that payment. So anyway, Shift4 Payments here, you can see tried to break out here last week. This was a pretty impressive candle for it, but ended up having a long upper shadow the next day that led to 2 more days of selling, culminating here today with a pretty ugly 1.7% sell-off here today. Notice that not only did that hurt a bit, but this one was already giving us a bit of indication that it was somewhat more bearish under the surface than what you might have recognized initially. Notice that we have consecutive lower highs in this blue line down below, known as the near-term line on the market forecast technical indicator. Notice with those 2 or 3 consecutive lower highs, we had nothing but higher highs in price action. So price went up at a time when there was a deterioration in the underlying indicator. And now we're starting to see, that catch up to that bearishness with today's fairly ugly candle where you close near the low of the session today and you're back below that falling 30-day moving average, in addition to having that weekly bearish posture. So what I did here in this case today is I sold a bear call spread on this. I think it was the July contracts, and I believe I sold the 70 strike call and I bought the 75. This was not the most liquid company on the planet, so you have to consider that as well. But I was able to get the trade done for basically a 30% return on risk, which is what I'm effectively shooting for with these credit spreads. So our break even on this trade is 71.15. So in other words, we want this stock to stay below this blue line between now and the middle of July. As long as it does that, then we can make our 30% return on risk. If it doesn't and it goes above the blue line, then we're going to end up having to take a loss on this, but it is a defined risk trade because we bought the 75 strike in addition to selling the 70 strike. So you can see that ever since this day it broke below its 30-day moving average over here, it has stayed below that blue line as well. And so my hope with this is that despite some attempts of bouncing here along the way, it has largely led to further selling as that moving average continues to coast lower. So if this stock continues to just ride that moving average lower, it's going to stay further and further away from this blue line. And whether it stays away from it a little bit or a long ways, it doesn't really matter. It just has to be below it. And so that's the trade here for tonight, taking advantage of that bearish near-term divergence signal on Shift4 Payments, ticker symbol 4, with a bear call spread. All right, that's what I had for you here tonight. If you appreciated the conversation and the presentation here tonight, I ask one simple request out of you. Click like for me there on Twitter. You can do that 4 different ways. However you choose to do it is the easiest for you. It all comes back in the same area there. As long as we're up and over 100 likes, I'll plan on doing another full-length video with another trade application like this on Tuesday. On the other hand, if these are getting a little bit too long-winded for you, I can certainly understand that as well. So feel free not to click like, and I can save myself plenty of time on Tuesday by doing just a 15-minute version there as well. So we'll let you guys decide collectively what you want out of this free video. David should be back with you tomorrow, and then again, we do have a holiday weekend in front of us here in the United States, so no Market Outlook video on Monday, but I should be back in action one way or another with you guys on Tuesday. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.